The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on the 16th, Wednesday, the 16th of October, mid-month. We're looking at the Dow of almost 200 points at 42,933. Really important because I have this as an alternate account G/B, meaning that if we break to another high above 43,277, that was just a one-off that happened yesterday. I wasn't sure it would be. I had a gut feeling with all the technicals still so strong that there was a really good chance that it could be. A one-off, in other words, the turnaround in the semis meant that there was an opportunity for other areas to take the lead. And that's really the important, the rotational, ever since the summer of 2010, what we've seen so often is that when the market is strong, there's a high-level consolidation. And then what happens is, I think of the scales of justice, as, you've got the weight on the left side and the weight on the right side, always trying to balance it. And what happens is that when one area gets overbought, another area takes its place. That's really so important because within the context of moving forward with the momentum, if the technicals are very strong, these sudden declines like we had going into early September, those turn out to be buying opportunities, but in certain areas. Sometimes you get a pullback, and then what was leading just suddenly takes a longer breather. I mean, a good example is Microsoft. That was absolutely fantastic, and then it's just been consolidating. I call it consolidating, meaning that it should go to higher highs, but it's really taking its time. All right, enough talk. Let's just get on with the show. What I want you to show you here is the look at the spike that we've just had. This is still a leg C. Now, what I tend to do in the 1 minute chart is I call this a phantom peak right here. And there are two bars that have parallel highs because it travels in quarter point increments. I tend to say, okay, look, you had a little nick right there in the on-balance volume. Treat that as a peak C. It means you get to the D in any positions you have. You can modify them. You can take a little bit off. You can raise the stop, but it gives you some opportunity. Very often in this kind of move, what you get is something very important, and that is you get a pullback, and then you get another higher high, and you actually get the true peak D. That's a preparation. The 200 period moving average of 58.62 has been taken out. That becomes a support area. Very strong technicals. The reason why I'm spending time on this one, a couple of reasons, but one of them is to show you in real time Chapman wave techniques. Look at this is a single leg A. Look at that. Going from the low today of, if I can just see it right there, right about the 58, 52 area. Here we are at 58.67 in one straight move to the upside. And that tells me, yes, there was a one-off. That's what I said to subscribers. We didn't add any positions today because we kind of aggressively long, and we have rotated into positions that are in areas that normally you would think, because they weren't doing well earlier, they'd stay, but no, they're really strong. So I'll go through some of them in a moment. Meantime, let's just go back to the S&P, which was weak. Now it's coming on strong. Oh, I didn't mean to do that in that particular chart. I'm done with that chart right now. Okay, what we're looking at is, yeah, so this is the Dow. Look at the weekly chart, leg E, but this week, we haven't even touched the green line. So for 4 weeks on the Chapman Wave Inside Track repellent line, we've gone above it. The week's young. We've still got another 2.5 days to go, more than that, 3 days, let's call it. We're not even an hour into the trading day. Yeah, so this is very positive. And leg E in the monthly chart of the Dow. We are long the Dow. We remain long. I didn't get aggressively long the Dow because we went to some other area, and that was very important that we were able to rotate like that. QQQ. As I said, big pullback from a leg F or a peak F/C. The technicals are still pretty strong. So I'm not saying I'm giving up on the QQQ. What I'm saying is it's a breather because here we go. Look at the SMHs. Are they going to turn positive today? I think that by the end of the day, there's a chance that they will. But that means that that's an area we've spoken about for some time, that it's been a lagging. Instead of a leading indicator, it's a lagging indicator, something I must respect, because I always say where the SMHs go, eventually the market tends to go. So I'm keeping that in mind, but at the same time, what I'm saying is there's a rotation going on. For instance, XLF, this is the S&P Select Financial Spider Fund, all-time high as we speak, but it's in leg C. Leg E in the weekly chart, all very strong technicals. Leg D in the monthly chart, but finally you got the KRE moving. Look at that. KRE is the regionals. I had said for quite some time, if you don't get the regionals, S&P Regional Bank Index moving, that's a bit of a problem. And it's a problem in the sense that what you get is like the S&P going up without the small caps. You want synchronicity. You want everything. You want the IYT. Look at JB Hunt. The IYT right now is up strongly, making a leg D finally in the monthly chart, a leg C in the weekly, and a brand new leg C in the, I believe, in the daily. But most importantly, look at this, JBHT. Look, that is, JB Hunt is in the transportation area. I mean, that is really important. So I like the fact that it gapped up on news up 9 at 183.96. It just tells me that's part of the rotation I'm looking at. Let's go on. We're going to go to, I want you to do a little more on this. So this is the IWM at the high of the day, 226.22. Breaking out above the 224.95 high. That means it's making a multi-year high in, it hasn't yet made that multi-year high. It has to go above, it was at 228, yes, 228.63, the high of July. But I like this very much. We've been talking about it for some time. We've been long since the very bottom, the August, the day after the low, and we've added to that aggressively. Small position, but aggressive. And I'm just thinking that this is the rotation that we're looking at. And let's go on to, now I needed to do this just to take a moment. Look, GDX. GDX hasn't even broken above the high that was made back in September at that 42 level. It's at 41.33. It's up 65 cents at 41.32. Good. But wait a minute. Gold. Look at that. That chart. That chart is, look at the monthly chart, almost at all-time highs, just pennies, I mean, a couple of dollars away from extending leg C, going to leg, that's a D in the weekly chart. This is a different chart, although you got the cup formation or V-shaped formation breakout here. So the reason why we have a gold stock is because we want a mix, a really nice mix portfolio. It's really important. So with that said, let's just look at silver, SI. Silver trading nicely today, up 51 cents at 32.27. But that weekly chart's really struggling. Monthly chart's looking much better. So let me have a sip of tea. As we go to the break, even more importantly, let's look at high-grade copper. High-grade copper is not going anywhere. It's really stuck. I'll be back in a moment. Basil Chapman, Tiger Ignitions Hour. Dow is up 138. S&P finally went positive. It's up 6.66.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back and we're looking at high-grade copper. As I said, it's up a little bit today, but it's got that pyramid formation. It needs to do a lot more work. Let's go on to crude oil. Crude oil right now is trading down 11 cents to 70.47. Look at that repellent. Chapman, we've been sidetracked. Repellent zone just keeps getting repelled. And look at the rhythm of the U-shaped patterns, declining U-shaped patterns, W on the side. Okay, we're looking at, let's go to this, and this is going to be very important. I had some questions about, I'm going to go to the questions right now. OKLO. OKLO is Oklo Inc., Clean Energy. It's one that was on our list. I've had it for a little while as something to watch. In fact, we almost got it the other day, but instead I went to back into an area that we wanted to be in for some time. We had great gains, huge gains in this, and then we took profits, and then it dropped sharply. We didn't get back in. We got back recently. So this is Oakland Inc., Clean Energy, also nuclear startup. So I had a good question from Jason, who asked the question and said, is this something to get into? Because although they haven't really produced, they're only starting their nuclear plant, I believe it is. I've liked this for a while. It says clean energy. I don't know exactly what they do, but from the description that you gave, I'm going to suggest, yes, it's gapped up 25% today, up 2.95 at 14.50. But today, you did send it today, you didn't send it yesterday, thank goodness, because I would have said, yeah, start your position yesterday, but I probably wouldn't have seen it until too late, and then I would have had to answer today, it would have been too late. I like what I'm seeing here, but you've got to understand, look at the chart formation. It could be hazardous to your health and hazardous to your wealth. If you don't plan your entries, I would have a series of entries. I would have X amount of money that I'm going to dedicate to this. And I would start a position here at 14.35 saying, are you out of your mind? It's bound to pull back at some point over the next 2 weeks to the maybe 12, even 10 area. But that's not the point, because there's a story involved. And I like stocks that have a story, because that story just always reappears as it's pulling back, and it keeps it it kind of makes a story base for it. That's what I like to think, that there are certain stocks, certain areas that just, like Tesla is one. It just has a story. There's always something going on with Tesla. So you can never consider a short position unless you're absolutely 100% sure, because, wow, any night, any day, at any moment, there could be a story. Well, I think this is in that same situation. Start your engines. Here's the plan that I would have. I would start a position here. You have to work out the percentage, but it's a dedicated amount that you want. Why? Because I think over a period of, I'm not going to say a year, I'm going to say over a period of between now and February, say 6-ish months, I wouldn't be surprised if there are sudden drops, but it somehow has these spirals to the upside that take it to higher highs, and not initially higher lows, but basically higher highs. That's all you want to be thinking of right now. Start your position, just a little position at 1443, and then think about everything. In other words, you're in London, so you're at about 4:20 in the afternoon, I think, something like that. Maybe the market's closed, or maybe I don't know how you're going to do it, whatever it is. But today or tomorrow, it doesn't matter. That's just to get your foot in the door. But this is the way I would look at it. You see this weekly 200 period moving average of 9.84, I think it is, 9.94. That's going to be key to support in this particular phase. I would not like to see it close under that on a weekly basis for more than 2 weeks, 3 weeks at the most. Certainly, I don't want to see it go under 8. But if you're looking long term, you might have to think about that. So yeah, you take 14.49 or whatever it is. The whole thing goes down to 10. You're down 40%. You're down a lot. Well, all I can say is that within the context of longer term, this is how you want to think of it. So start your engines. I will tell you where I would add. Yesterday, the low was in the low 10s, 10.18 or so. Let me give you the exact figure. Yesterday, the low was 9.54. So in 2 days, it's gone from the 9s to the 14s. You got to anticipate this either has to spiral, continue up to the upside. You just keep going, or else there's a problem. So I'm saying, get your engine started, start your position here, smallish position, just knowing that you're splitting it up into parts. And then as it comes down, give me a yell. When it goes under 11.70, we'll see, is that where you add the next tranche? So you're going in tranches. And in fact, I'll do it right now. 12.49 was where we started speaking, that area. And then a little more, you've got to have left over. You've got to have a position that you can put on later on if there's some crazy thing that is breaking up or breaking down, but you still like it. And then just around between 12.10 and 11.90, just another little bit. And then you have to wait. And then I'd say wait a couple of weeks. Okay, that's that. Next one is, excuse me, within the context of, so I spoke about Tesla. So I'm going to read this, actually. Usually I just got to get what about this, what about that, why I'm in, but sometimes I get a little bit of a story. I don't usually like to take the time to read the story, but every once in a while, it's a story that I'm thinking. So therefore I want to read it. Hi, Basil. I hope you're well. I am. I'm fine. Thank you. Although I had a CAT scan yesterday for something. We'll see if that's going to be okay. Really enjoyed your recent analysis of the markets. I'm wondering if this would be a good spot to add to an old Tesla position for buy and hold. I bought at the lows in early 2023. Let's get Tesla up here to 23. Oh, so you must have bought somewhere in the mid 100s. That's great. Congratulations. But I would like to add as a longer term investment. I have a target of 575. So that's above the all-time high of 415.50. I'm just going to pull this across right here. And there are a lot of you that have asked me about Tesla. Yes, this is a split. Remember, once upon a time, it was 389.61 at its high. Back, it was a peak D high with small letters. So that was a long time ago. That was back in 2017, September. So now that high is 25. Wow. So I can't even remember. I can't even figure out what the split is. But with that in mind, what I am looking at right now is that there's this pattern that I spoke about the other day, dreaded H right there with the peak D top. It had two peak D tops very quickly in succession. That's just be a little careful. But it did pull back and gap down, and it's been holding the 200 period moving average. So this is what I'm thinking. And now I need to clarify. I have a target of 575 in the next big push. Could you please give your thoughts on whether we go up from here, or is this a possibility of going back into the 100s area again? Do you have any concerns at all about interest rates and how they might impact Tesla, or would you simply do technical? And do you have a concern at all about interest rates and how they impact the market? Thank you for all you do, Basil. Chris, I'll be back in a moment. A lot of questions, and they're very pertinent questions.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hey, I'll be back to that in a moment. I just want to follow up because this is live. I wanted to show you. Remember I said that this 1 minute chart said that was a phantom peak, but there's a chance that you've got to do a little bookkeeping, a little kind of money management there, raise your stop or whatever it is. And that did go to a D. But now what's happened is it's gone to a higher high. So I take that D, I move it away, I keep this red. There's a lot of buying going on because I'm a little slow on TradeStation today. It just tells me there's a lot of stuff going on. So that tells me that I used a phantom peak C. Now this is the real D right here. It's not an E, it's a D. That's the real D. And I'm saying, okay, now we can see a little digestive phase going on right now. In fact, I personally just took a little bit off there. And now what we're looking at is that the 200-period moving average that I mentioned in the den earlier on, if the 5860 level had to hold, well, it didn't. It went much lower than that, down to the 50s area, went to 53. That was the level to watch if you could pierce 5872. Well, 69. So we've gone and we're holding now on the 200-period moving average. See how these moving averages, you didn't even have to, it meant nothing, right? Look, once you broke down yesterday, that was on the 15th at 10:40 in the morning. Right now, exactly as we're talking, 24 hours ago, you broke down and you didn't even come close. But the closer you get, the more of a magnet it becomes. Now it's a magnet. 6872, that's your magnet. Let me give you the exact figure. 5873. So how we can push above it is going to be important. Right now, I just think there's a little bit of a stalling motion. All right, we did that. Now we're going to go back. So here's the issue. So first of all, you asked about Tesla. The breakdown that we saw and the fact that we've taken 3 bars since then, holding the 200-period moving average up $1.30 right now, 220.92, tells me in this particular phase, like Microsoft, look at that. In this particular phase, here's the market. The Dow's up 202, S&P's up 13, the IWM is up 3.40 at 226.51. This is not in the purview of buyers right now. So Microsoft, Tesla, they just they have to wait for the next phase that brings them back into the show. Now, Tesla comes out. I heard Trump. I just know how it happened. I was on YouTube listening to something, and suddenly out of the blue, I'm listening to Trump. Trump being interviewed, and then it switched over to Musk. I guess these things go together. And I've never really listened to Musk. I've read a little bit every once in a while, and sometimes he says these off-the-wall things. World's richest man, you've got to listen to the world's richest man. So I thought, okay, let's listen. Well, he's not articulate in the sense that he uses fewer words to get to the point. He uses quite a number of words, but he does get to points. And I thought, okay, that's a different person to what I always hear in the media. Okay, that's all I wanted to hear. So now I can listen to him a little closer. Thought, okay, there is more substance to him. He's done some brilliant things. But is he the kind of Edison of the 21st century? I think so. All right, within that context, I speak about him only because you have to speak about him because now he's tied himself together with Trump. And I said a while back, in fact, months ago, I said, I'm beginning to sense that people are looking at Musk and saying, I got this Tesla or wanted to buy a Tesla. I don't really want to be associated with them. And yet I'm seeing more and more Teslas all over the show. They're almost like Toyota Camrys. You remember back in the 80s, 2080, 1980s, that is. So what I'm thinking of here is there's always a story. So if there's a story, what I'm going to say to you is this. I wouldn't do anything now. If there's a huge gap up for whatever reason, immediately after the election, I don't see how this election is going to be resolved unless it's so clear that there cannot be any questions on either side. And that just tells me that if Musk was just independent, he was doing his usual thing, he wasn't tied to any politician, I say, you know what, I would start my second tranche right now, but I'd split it into two. I'd take one now, and I'd have one aberration at 165, something, some crazy number. I'm just going to say I'd hold off. I'd sacrifice upside because the downside could be very sudden. I'm just a little nervous about Tesla in the sense that Tesla has now become a political entity and not just its own unit. So let's hold off. And the question about whether it can go to the hundreds, at this point, it has battery, it has so many things going for it. But it has this whole political stance that I think could deteriorate. It could hurt earnings because of the sales of the car. And there's a lot of competition coming on. So hold off. I like your thinking. Now, when you get to the bonds, my inclination is to think that bonds need to find a norm. Just forget about everything else. Just say, 40-year bull market, 3.5-year kind of bearish, certainly a bear market, you can call it. I think it's not an entity right now that I would worry about. I don't think yields are going back to where they were. And I do think, if anything, the bias over the next year is for them to go higher. And that's how I'm going to leave it. But the TLTs had a fabulous move off. It wasn't even a double bottom. It held us. You remember I drew in this trend line. In fact, I was going to do this. I thought, too messy, but I'm going to do it now. This is a technique, Chapman wave technique. There we go. Pink, green, if I can find the green, and went to the inside. I was going to draw this in, but I thought, let it play out. We've got the whole week to go with this weekly chart. And look how nicely it went under, and now it's back over the inside track. Propellant zone went under it, and now it's back. So this is good. And what it says is the TLT 95.26. I think the 95.30s to 95.30s should be a lot of resistance. All right. With that said, I say 30s to 50s. All right. With that said, what did I want to do? So I just wanted to show you this because this is live, and this is what I did. I said, remember, I took something off. Look, there's your peak D, the real peak D in the 1 minute chart. This is live. There's nothing here that I can make up. And look, the 9-period moving average hasn't turned pink yet. It's close. The 5 minute chart, I think of this as the daily. 1 minute chart, think of this as the weekly, the 5 minute chart. Very important to hold 58.67, the 200-period moving average. And here we are in the, what happened there? And here we are, single leg A to the upside. It got repelled where? At the 200-period exponential moving average. Just a couple of techniques that I want to do live. It's really important. I'll be back. We'll talk about uranium. I was asked about that as well.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, so in the Den, Jeff, those are the YouTube, Tiger, folks, you should join YouTube and Tiger Den. It's just, information's overwhelming. It's just incredible. So Jeff says, gives a whole story on Oklo. It's scalable to 50 megawatt MWE and operate for 10 years or longer before refueling. Oklo's fast reactors incorporate inherent safety features and can be fueled by recycled waste. Oh, that's great. I mean, I remember originally reading and thinking, this is a good story, but never got into, instead, we actually got back into, so look at this. This is the RURNM, is a uranium spot, uranium miners ETF. And let me just tell my my engineer something right here. Hissing now. Okay, so now I can go back here. Yeah, so uranium is up at 50.33, up 2.23. URA is the equivalent chart pattern, but in the global X uranium ETF. It had an all-time high of 33.66 a couple of months back, or end of 2023, and now it's suddenly in leg D in the daily at 31.73. Leg C in the weekly chart. Very nice. So we have our UEC, Uranium Energy Corporation, UEC. I was typing and talking at the same time. That's up 7% today, up 52 at 7.87. So this is one we initially had way back. We had it in the $3 area, and it ran all the way to 8.34. And on the way down, on the way up, we took some profits. On the way down, then we got out completely. Had to wait. Had one shot, I believe, tried to get in. Had a very small loss, and I said, let's wait. Then we finally got back in, and now here it is at a new recovery high, multi-year high, actually. No, multi-month high. And 8.34. we're going to see if it can get there. It might take a little while, or it could be very quickly, but uranium has just become the talk, and that makes me a little nervous, meaning that we could become overbought quite quickly. But anyway, this has done fantastically so far. So that's what I'm saying by being in the right sectors. You don't know until it's really working whether or not that can continue. Here's another one that I want you to talk about in terms of, so I want you to just mention that I didn't quite finish to say that, so I anticipate that yields, actually, let me do this. Can I do that when I mess up my charts? I'll do it tomorrow. I don't want to do anything now because I'm waiting for my technician to come from my computer. The fan suddenly did crazy things the other day, but now it's all quiet. I don't know whether it's dead or if it's working, but he'll be here tomorrow night. So let's wait to see. So within the context, thank you for that message, Larry. And just best health to you. I'm so pleased that you're getting better. And yes, I am worried about Garo. Haven't heard a word, and it's very serious. And he knew it was serious, and he was looking for other ways to be able to trade because he couldn't do the homework. So our prayers are out there for Garo and for some other people that we really love to hear from here at TFNN. Let me just get out of that. Okay, so now what I want you to do is this. In the time remaining, look, you cannot tell on the big single leg A to the upside where it's going to fail. We are now back down at 58.60 in a single leg A up to the 200 period moving average in the S&P futures, and you got repelled. Here's where it should start to form a base. About 58, it mustn't go under 58, 56, but right in this area. And in the next, it's 10 to 11. So by 10 past 11, during Steve's show, you want to see it start to trade, not the 58.66. That's not good enough. That's not going to get the pink 9-period moving average back positive again. You want to see up in the 58.69.70 area. That was the level that I mentioned earlier. 58.69 is kind of important. So let's see what happens there. Now let's go back to our story. And the story is, I had written down here, okay, XPEV, little Chinese move. Remember I said that peak F top, got to be a little careful there. FXI, I can see the 979 200 period exponential moving average being major support, but actually it shouldn't get there. It's at 1118. I think 1070s full some of the gap, but maybe not all of the gap. Maybe 1070 should try to rebound to the 1190 area. Otherwise, it's got a problem shorter term. FXI is the large China ETF. Dreaded H pattern. This looks like that Tesla chart, which I think is, had the exact same pattern. I mentioned this the other day. It's FXI trading at 3171. I'm going to get rid of that because it's useless now. When I'm done with the technical tool, it just gets shoved aside because you don't need it anymore. But that doji candle says we're really close to getting a sell signal, upgrade to a sell mode in the FXI. I'd be a little careful. So I'll tell you what, it must hold 30. It's a 31.73. By Friday, it mustn't take out 30. Preferably, you should try for the 32.92 area. All right, what am I looking at here? Oh, EEM. This is the EEM is the, here we go. EEM trading at 45.57, up 39. iShares, emerging market ETF, had a very nice move to a peak G doji candle. Well, I can't say doji because, and gaps with overseas stocks, you always get them. But it had the same pattern as the FXI, and then I was looking at with Tesla, dreaded H failure, and it comes down. So at 45.57 right now, it needs I'm going to give it all the way until Monday of next week. It has to try for the 46.53 level. Not very much higher, but that's what it's got to try for. Definitely mustn't close under 44.75. All right, next question came in. Covering a lot of questions today. Yeah. You've explained not too worried about upside. Yeah, so I'll do that. I'm just not going to waste time on this because the VIX index, I had mentioned before, the fact that it moved so quickly off when the market was at an all-time high just says to me a lot of fund managers are getting very nervous and are trying to prepare for some kind of a slide. That's really what I'm looking at. It's not telling us about this very minute. It's telling us about what it's looking at come November. I wonder what's happening in November. I'll be back. Dow's up 198 and the S&P's up 4.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back, and we've got this final segment. I just want to go through a couple of market things. So as I said, we're looking at the 9-period 1-minute chart. The 9-period moving average is just now turning L long, meaning if it holds that way all the way through this minute, that says you're back into the up mode for the moment. We'll see what happens. Didn't change anything in the 5-minute chart when prices pull back very sharply. You've got to monitor it, because if that 9-period moving average holds green, it's like a spring-loaded move that can go pop back to the upside. So we're watching that. Meantime, let's get on to the show, which means that we've got to look at what I'm anticipating. So let's go back to this. We got the Dow, and I'm missing any questions? No. Yeah. So the Dow is at 217 at 42,953. My analysis suggests that we should go higher. And when we get to So the next move up, if it's above 43,277, well, I have to call it a leg C. That says we should still get to a D. I'm suspecting that in the next, today's Wednesday, by early next week, That's when we're going to see whether or not the market is being forced higher because buying keeps coming in like in different sectors. That's going to be important. Or whether that's where the market says, all right, now we've got to be a little careful. I think we might hold off all the way into the later part of October. So in maybe the third week into the fourth week. And then the market says, all right, let's be careful. Anything can happen. That's my thinking. But in the meantime, look, there's nothing wrong. If you didn't know there was an election going on in 3 weeks' time, in less than 3 weeks' time, you would say this is all very positive. That was a one-off to the pullback to the downside. That's why I'm looking at it right now. I'll be wrong if the Dow starts to trade under 42,000 in the next 5 days. I'll be right back. No, I won't. I'll be back tomorrow. Stay tuned for Steve Rhodes. Check out my Opening Call daily newsletter and great shows coming up today. See you.